I'm seeing a lot of people asking me like, oh, can you look at my analysis and my trades, or my analysis and my chart markups? And then I look at it and everything they're saying is right. But do you know what these students are asking me? They're asking me about my feedback on their analysis on charts like this. So they're like, okay, price is at support, and there's multiple rejections on the support floor, and I see a head and shoulders, and you know, they give me all these things completely right. The technical analysis is right on, nothing to note there. But then I'm like, okay, but so, okay, they're looking at this and they're saying, you know, I see a head and shoulders and I see a strong support floor. And then they're like, okay, so head and shoulders is broken down support, and I want it to come back up here and then make something like this. And I'm like, you know what? That is, yeah, nothing to say about that. But I want you to zoom out a bit, shift your perspective off of this chart and into our macro cycle. Right now in our macro cycle, we are in a bull market. And normally this would be a fantastic, you know, markup and expectation. But do you want to be shorting in a bull market? And although this coin, you know, I completely agree, this coin is at its lowest, doesn't have any strength here. But it's like when the market is pumping and it's in a bullish trajectory, you kind of want to avoid shorting in a strong bull market, because, you know, when BTC drives in any direction, it kind of moves the whole market with it. In any other instance, yeah, that's a great short play if this were to happen and you get a reversal play here to the downside. But when the market looks like it's moving up, you know, on the total crypto market cap, everything's moving up since way down here, since December 2022. You don't, the idea is you don't want to short when things are doing this in the macro side of things. Does that make sense? David says, that was me on charts when I was new. I'm still new, but when I was really new. Yeah, and there's nothing wrong. I'm not trying to make anyone feel bad or shade anyone, but that is something to note. When it's kind of contradictory, right? Because I'm saying your analysis is right. That's completely right. There's a head and shoulders broken below strong support. Let me pull that chart back up so we have a visual. Head and shoulders broken below strong support, you know, come back up here for a break and retest. Great short play. Yes, technically very, very wise. But macro cycle wise, maybe don't short in a bull market, because you run the risk of, you know, if BTC does something really fun and really cool, and if a parabolic market decides to start, you don't want to be shorting anything in those times, just because you're fighting with the strength of the overall market. With that being said, there's something else that I have to say here. Let me write this in. This would be a great little, let's see, an anchored text. You don't want to short in a bull market. Okay, that's one. Oh my gosh, so many boxes. And then the second one I got is, you also don't want to be buying off charts that are at their historical lows in a bull market. Okay, so let's, you know, forget this, but I did tell you that, right? I said don't short in a bull market even if it looks technically sound. Another thing I get is, wow, this coin used to be at $23. Look how low it is now. It's at, what are we at? 28 cents. This is a perfect buying opportunity. Because 28 cents to $23, holy shit. Or even, up here, December 2021, 29 cents up to $6.85. Damn, that's oh my gosh, 2,500% move. That's really good, right? This is a great time to buy. You said, Hillorie, when people are fearful, be greedy. So when it's at its lows, I should be buying. Yes, but kind of no. The point is you don't want to be buying off charts that are at their historical lows in a bull market. I'm going to make that note here as well. That's one. And secondly, charts. You also don't want to be buying off charts that are at their historical lows in a bull market. Why? Because this is called catching a falling knife. I don't know if you've heard that expression before, catching a falling knife, but just imagine. Okay, remember in the technical analysis lesson where I'm holding a green ball and I'm throwing it up and down to show you acceleration and deceleration? Now imagine I was holding a knife. Imagine I was holding a knife and tossing it up and down. So catching a falling knife is when the markets are going down, 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 all these downs. All these moves to the downside, and you keep trying to buy it. When you keep trying to buy at these levels, and you're saying, oh, this is a good low to buy, I want to buy here, and then price falls into your sell order. So you think of it as a knife. Think of your entry as your hand and price movement as a knife. So every time you're thinking, oh, this is a good place to buy. Let's say at this level, you want to buy it because it's low, it's on a support floor. So you put on an order right here. Only for price to go up and then hit your hand, your entry, like a falling knife. So that's the idea of catching a falling knife. You don't want to catch falling knives. You don't want to be buying things when the trend of it is falling. When it keeps falling and you keep trying to catch it, thinking it's going to head up, but all it keeps doing is jabbing you in the hand with the blade. You don't want to do that. You don't want to harm yourself. So, all these moves to the downside, and people keep trying to buy at the lows, thinking this is the low, only for price to make more lower lows. And that sucks. Because you're catching a falling knife, and you don't want to be doing that. You don't want to be buying things that are making brand new lows when we are in a bull market. Because there's other things that are moving up. Because that's silly, right? If you just imagine both those charts, the one I was just on, CRV, and then this one, CRV was going down. It was like doing this. And then you got the rest of the market doing this. So why are you going to try to catch a falling knife on something that just keeps moving to the downside? Thinking you're catching the bottom, thinking you're buying the lows, when it just keeps going lower, when you can be putting your money in things that are actually moving up. And there's a lot of things moving up. If it's not BTC, it's all these silly altcoins moving to the upside. Not this one in particularly, but there are many altcoins that are still moving up. Even Pepe has been moving up on an uptrend, while that other coin making lows and lows and lows, historical lows. If you go on a chart and you see that it is making historical lows when we are in a bull market, that's a chart you want to stay out of. Okay, when everything else is trending up, you want to stay out of the things that are trending down, because that's not wise. It's not wise money management. Couldn't these bounces also be opportunities, day trading opportunities? They could. Maybe I'm wrong, but I had some really great trades, trading strong support levels, even in such falling coins. Yes, but what I'm talking about is like buying the lows. Buying the lows, when I say that, is like holding for the long term, for a price appreciation. Day trading opportunities is kind of in its own different league. Not that I recommend you to go looking for short entries everywhere right now, like in this current market. But yes, if you see day trading opportunities off support and you see proper 1 hour, oh boy, you see proper 1 hour bounces and it's respecting the levels on the intraday charts, then yes. But those are quick ins and outs, right? You're not buying the low and being like, oh, I'm buying this at, what's this, 40 cents, and it's going to go up to $4. Because that's a long play into the future that we don't know if that's going to happen. Not with the current price action. Yes, big difference, yes. So, yeah, day trading, that's why there are more opportunities in day trading, because we are capitalizing on the small moves so long as we can see it's respected on the 4 hour and the 1 hour. But, you know, what I'm talking about is you don't want to be catching falling knives thinking that this is going to go up to $20 or whatever it may be. Because these charts are making historical lows. This is the lowest it's ever been. It's the lowest it's ever been, and people are trying to say like, oh, I'm gonna accumulate and stack my coins up here, and I'm gonna make so much profit off this. Maybe not, because the market is moving in other things. And if this market is falling, if this chart or coin, I'm sorry, is falling when everything else is moving up, then that's not a good idea. That's not good news. So yes, take this note, maybe write it down, make a mental note of it. You don't want to short in a bull market in general, not always. There are shorting opportunities in a bull market. And you also don't want to be buying off charts that are at their historical lows in a bull market.